S&P 500 and Nasdaq futures pointed higher on Wednesday to begin a holiday-shortened trading week after the two indexes posted their steepest one-day drop in over a month on Tuesday, as investors weighed a less-than-stellar earnings report from Tesla and fiscal jitters. Sentiment was also bolstered after a U.S. judge ruled that Google's dominance in search and advertising wasn't achieved through anti-competitive means, dealing a blow to the Justice Department's case, but stopping short of the sweeping changes sought by the agency. The decision was seen as a positive for other big tech companies facing regulatory scrutiny. By 5:30 Eastern Time, the S&P 500 futures contract had risen by 0.4%, and Nasdaq 100 futures had advanced by 0.6%. Dow futures, meanwhile, were broadly unchanged. Investors will be keeping a close eye on Washington, D.C., where lawmakers are struggling to reach a last-minute deal to avoid shutting down the government just days before the September 30th deadline. Funding for the military and veterans, among other things, could be delayed if Congress fails to pass a spending package before the weekend. On the earnings front, shares of Tesla fell nearly 8% on Tuesday after the electric car maker reported lower than expected vehicle deliveries in the third quarter, which some analysts view as a potential red flag for weakening demand. Rival Rivian also reported weaker than anticipated deliveries on Tuesday, and its shares slid around 10%. But shares of Nvidia rose more than 4% after the graphics card maker raised its quarterly revenue forecast, citing strong demand for its data center chips used in AI applications. Its adjusted profit also topped estimates as the company benefited from a shift toward cloud gaming. In pre-market trading, shares of Salesforce rose more than 2% after the customer relationship management software giant posted better than expected quarterly earnings and revenue and issued a strong forecast for the year. Meanwhile, Best Buy shares slumped around 8%, even though the electronics retailer reported quarterly earnings and revenue that beat expectations. The stock was likely coming down because of a cautious outlook for the holiday season and full-year guidance that came in below consensus estimates. Foot Locker shares tumbled around 10% after the footwear retailer lowered its full-year guidance, citing continued weakness in sales of Adidas products. The company also reported a surprise third-quarter loss and said comparable sales fell 6.2%. In commodities trading, oil futures for October delivery rose 0.6% to $91.67 a barrel. The dollar index, which measures the greenback against a basket of 6 major currencies, was little changed at 107.33. A stronger dollar makes it more expensive for foreign buyers to purchase dollar-denominated assets such as treasuries, which could potentially drive them away and push up yields. On Tuesday, the yield on the benchmark 10-year Treasury note touched its highest level since early August at around 4.83%. It was last seen at about 4.81%. The 2-year Treasury yield, which is highly sensitive to changes in monetary policy expectations, was up slightly at around 5.02%. In Europe, the continent-wide Stoxx 600 index closed down 0.2% on Tuesday. The UK's FTSE 100 fell 0.5%, while Germany's DAX declined 0.3%. France's CAC 40 was the only major European index in positive territory, rising 0.1%. Earlier in Asia, China's Shanghai Composite Index rose 0.4%, while Hong Kong's Hang Seng Index closed down 0.8%. Japan's Nikkei 225 was closed for a holiday. Investors are now looking ahead to Friday's release of the closely watched jobs report for September, which will provide clues about the strength of the U.S. economy and the Federal Reserve's policy path. Economists expect the report to show that the economy added 170,000 jobs last month, according to a Reuters poll. That compares with an average monthly gain of 187,000 in 2023 so far.